The U.S. median household income in 2023 was $80,610, according to the Census Bureau's Income in the United States 2023 report. That's the official number. And if you break it down, it works out to about $6,717 a month before taxes. Now, on paper, that seems like a comfortable income, but when you compare it with rising living costs, it doesn't stretch as far as it used to. According to the Bureau of Labor Statistics, consumer prices up 2.7% over the 12 months ending July 2025. Even though that's lower than the 8 to 9% levels Americans endured back in 2022, it's still enough that groceries, rent, gas, and utilities continue to eat away at paychecks. A median income household feels squeezed, working hard all year while their purchasing power erodes bit by bit. But here's the twist. Some investors are already getting more than that $80,610 figure, not from jobs, not from side hustles, but from dividends on a single stock. That stock? Broadcom Inc., ticker AVGO. Broadcom is often introduced as a semiconductor company, but that undersells it. Today, it's a dual-engine powerhouse. On one side, Broadcom dominates AI networking hardware, the high-speed chips and connectivity units that allow hyperscale cloud companies like Amazon, Google, and Microsoft to train the next generation of AI models. On the other side, since acquiring VMware in November 2023 for $69 billion, Broadcom has built a software arm with sticky, recurring subscription contracts. The result is a company that is crucial to both AI infrastructure and enterprise IT. As of August 19th, 2025, Broadcom stock trades at about $305.76 per share. This level reflects the 10-for-1 stock split that Broadcom executed on July 15th, 2024. The company currently pays an annual dividend of $2.36 per share, which at today's price of $305.76 equals a dividend yield of 0.77%. That yield may seem modest, but look at the growth story. In 2015, Broadcom's dividend, split adjusted, was just 21 cents per share. In 2025, it's $2.36. That's nearly 10 times growth in 10 years, an average compounding rate of about 26% per year. If an investor today owned 3,750 shares, their annual dividend income would be about $8,850. That by itself doesn't surpass the U.S. median household income of $80,610. But here's the critical part. The trajectory of that dividend growth, combined with capital appreciation, is what makes investors wealthier over time. Over the past 12 months, Broadcom's stock has climbed from about $172 to $307, a gain of roughly 78% year over year. Capital growth paired with dividend growth is a rare and powerful double engine for wealth building. In its Q2 FY 2025 results, released June 5th, 2025, Broadcom reported revenue of $15 billion, up 20% year over year, and GAAP net income of $5.0 billion. The company also issued guidance for Q3 revenue of about $15.8 billion, a 21% increase from the prior year period. Combine this profitability with VMware's sticky enterprise contracts, and what you get is a machine that can steadily expand shareholder payouts even through industry cycles. The long-term outlook doesn't show signs of slowing. According to Forbes, the global AI market is projected to grow at an annual rate of 36.6% through 2030. Broadcom's high-speed networking solutions are at the center of this AI data center boom. And what really matters, thanks to VMware's subscription revenues, Broadcom isn't just a cyclical chip maker anymore. That makes its dividend policy much more durable. Of course, most people aren't buying 3,750 shares. That's a $1.15 million position at today's price. But even a smaller investor holding 10 shares today collects $21 annually in dividends. If Broadcom can continue raising its dividend even at 15% annually, half the pace of the last decade, the $21 turns into nearly $85 within 10 years without buying a single additional share. This is the magic of dividend compounding. Risks remain. Broadcom faces volatility in the semiconductor cycle, export restrictions, global macro shocks, and regulatory challenges. And at $305 per share, a 20 to 30% pullback is possible. But the fact that Broadcom has increased its dividend every single year for more than a decade through trade conflict, supply shortages, and recessions speaks volumes about how resilient its business model is. The bigger story is this: owning assets that grow in both value and payouts can eventually make your portfolio out-earn your paycheck. That's what investors in Broadcom are essentially betting on. Some already collect more in dividends than they used to make in salaries. Broadcom is a clear case study. Discipline, growth, and shareholder returns aligned. And here on Finance FlowChart, this is exactly what we break down: how numbers on an earnings report translate into long-term financial freedom. Subscribe and join us as we map more of these high-impact opportunities step by step, so your flowchart to financial freedom becomes clearer with every episode.